How's it going, guys? My name is Franker and welcome back to the channel. Today we're going to be going through 5 things that I learned in 2023 in application to my trading, obviously, and my investing, and basically what I've learned and how I'm now implementing it more into my trading strategy for 2024 and hopefully beyond. Now, of course, before we jump into the video, I do want to apologize. I have been away the past couple of weeks, obviously Christmas, New Year's, a busy time of the year. I decided to just have a couple week break from YouTube just so I could start fresh in 2024 and hopefully not burn myself out essentially. Now, of course, if you are new to the channel and you do enjoy this sort of content, we do typically post weekly videos, bar obviously the past 2 weeks that I have been away, and we are at 429 subscribers. So if you do enjoy this sort of content, let's push that number up to 500 subs. It would be greatly appreciated. But let's jump straight into the 5 things now that I learnt. Now these are in no particular order necessarily. It's not like the best thing I've learnt all year or the most influential. This is just a bit more random and just whatever order I wrote these in. Now the first one is going to be invest far more in Bitcoins over altcoins. Now this is in particular relation to the early stages of a bull market. I think a lot of people make this mistake, and I definitely made it in 2023 and 2022 maybe, and maybe even a bit of 2024, where I basically put too much money into Bitcoin. And when we're talking about opportunity cost, obviously a lot of altcoins have performed really well. That's not to say that my altcoins are down. I have a lot of altcoins that are up 50%, 30%, 40%, which is a great return, obviously, compared to a lot of other markets, what you can earn like in the stock market and stuff. But compared to Bitcoin has performed absolutely incredibly, over 150% or something. I mean, if we just we'll quickly pull up the percentage for you guys so you get the idea where we're going. Which one is it in? Is it in this one? The price range, from top to bottom, literally 215%. From bottom to where we are now, 172%. So obviously Bitcoin has performed really well. And what would basically the mistake I made is I invested in altcoins too early in this bull market, and you can see clearly from this chart we've got on screen, the Bitcoin dominance, that basically the past year and a bit, we've basically just seen Bitcoin dominance rise in percentage, which means that Bitcoin is outpacing the rest of the cryptocurrency market, and hence it's gaining more value quicker than the rest. So what the lesson is for me is going into future cryptocurrency cycles is that early in the Bitcoin market, particularly if we have a look at where we've been over this red to blue transition period where we are kind of at the moment, is that we want to be mostly investing in Bitcoin. It's a bit hindsight now, obviously, as we get closer and closer to an altcoin season sort of thing, but going into future cycles, obviously, if we're in this red to blue period, I'm going to be investing far more of my capital into Bitcoin over a lot of altcoins, because obviously Bitcoin performs far better, and I've kind of seen that in my portfolio. And it's not that I still invest majority in Bitcoin, majority of my investments in Bitcoin, but obviously I would do even more basically because it's just been performing far better. Now the second thing I learned, this one's pretty stupid, I can't lie, but I invested in a lot of altcoins that offered rewards, not even necessarily the coin or anything offered rewards, but coins that you can stake, like Ethereum, like Matic, like the Crow token, Solana, any token like that offers rewards. I probably over invested in those because of the rewards. My thought process being, oh well, I know it's not a Bitcoin season yet, but over the course of the time of me holding them and the rewards that I'll earn, I'll basically, if I don't outpace Bitcoin, the rewards will make up for it, and that's just not the case. It's a bit of a foolish thing that I was thinking when I kind of made some of my investments. It's not that they're performing particularly bad. Even as I said, a lot of my altcoins are up 20, 30, 40, 50%. But, the matter of fact is, even with the rewards that they're earning, they're just not keeping up with Bitcoin. So it's kind of the same thing again, where we want to be investing majority in Bitcoin, avoiding altcoins early in a bull market cycle. But in particular, don't be picking investments based off the rewards that you're going to get. Don't be picking investments based off, what APY is offered or anything like that. Just pick tokens that are fundamentally strong and have a good chart set up, essentially. Going into future cycles, same thing again. We want to be looking at fundamentally strong tokens with a good chart, basically, not necessarily rewards that could, make up for the difference, essentially. Now, my third thing that I learned, this is a really, really, really important one. So it is time targets over price targets in the markets and following cycles. So obviously, if we go back to our 4-year cycle chart, if we had have just followed this, hypothetically, in a hypothetical world, I think a lot of people, are gonna look back and kick themselves. If we'd have just, after the 11 bar period, just waited 12 months and then gone all in, like all the cycles, if we'd have just waited 12 months from the peak and gone all in, then we'd be up absolutely ridiculous amounts of money. But nobody does that, essentially. Nobody is just going all in 12 months. And I'm not saying that's the right strategy, but what I'm saying is that a lot of people look at price targets. They're saying Bitcoin has to fall to $10,000, and Bitcoin doesn't have to do anything. What you'll typically see is that these things will repeat time and time again, within regards to time in the market. And that's because, the market players, the investors, they never really change. It's always the same, human conscious that, are making these decisions, that are getting fooled. And that happens time and time again in the market. So they won't be the exact same, but you'll hear the saying that markets will often rhyme each cycle, sort of thing, where the same thing is happening over and over again. That's because market sentiment doesn't really change. And that's why you see these the timing in the markets repeat over and over again, where, each cycle, it's basically just the same thing, just with different price movements. And anyone who's trying to tell you that a specific price has to happen, those calling for Bitcoin at $10,000, those calling for Bitcoin $100,000, nobody can pick that. The price target is impossible to pick. What you really want to focus on is time targets. How long is this going to take? You look at, 2020, November 2024, roughly, we should be hitting an all-time high, here or there, give or take a few months, sort of thing. If we go 11 months, October 2025, we'll see our peak. I can't tell you where the peak is going to be, but I can tell you that there's a likely chance, I can't say exactly, but there is a good chance that's when we will see a peak. And people are going to get fooled around this time because they're going to be waiting for Bitcoin $200,000. Everybody will say, I'll sell when Bitcoin hits 200,000, or I'll sell when Bitcoin hits 250,000, when really they should just be focusing on time targets. And that's something that I didn't necessarily learn in 2023, but I definitely implemented more into my trading strategy. And you can do this on any time frame. You can do it on the hourly chart, the 4-hourly chart, the monthly, weekly, daily, whatever it is. Following time targets works far, far better. I found it to be far more accurate, and it just works, and it obviously works hand in hand with cycles. Things like our 18.6 year cycle. I won't go into details at the moment, but obviously housing market cycles, the Bitcoin 4-year cycle. Using all these cycles, using all these time targets, so we can place ourselves in the best position at the right time, regardless of what price is doing, I have found to work far better in a trading strategy. And that is something that, I've probably learnt maybe, a year or two ago, sort of thing, but I really implemented it in 2023 and it worked a charm. So that is something, if I could stress that to you guys, that is something I would absolutely stress. Now, sticking on the theme with, if we'd have just gone all in 12 months after, the peak, we would all be, millionaires at this point, sort of thing. Well, the number 4, the fourth thing I learned in 2023 is I should really be more greedy at the bottoms. And it kind of, it's hard. It's a really hard thing to do, and in hindsight, it seems easy. Where nobody wanted to invest in Bitcoin during this time in the market. It was horrible, no good, not fun. Everyone was down. Sentiment was absolutely atrocious. When in reality, that's when I should have been getting really hungry. And don't get me wrong. I invested. Probably the majority of my investments is in. Oh, hang on, turn the magnet off. In this rough bottom. But that's not to say I have been in buying here and I bought here. I've been buying a long time. But what I should have done really is probably focused my investments a bit more. Follow the timing of the markets and been really greedy these bottom few months. It's hard. It's hard to do in the moment. In hindsight, easy, but I don't think I was greedy enough at the bottoms. I was greedy, relatively greedy the whole time, buying and buying and buying, and then getting the rewards. But if I have just been more greedy at the bottom, it would have been far better. And that obviously relates quite closely to timing the market, time targets over price targets and following cycles. But it's not something I'm kicking myself over necessarily, but going into the next cycle, same thing again. I'm probably just going to be more patient down the bottom whilst price falls, and then really greedy, when I think the bottom is coming in. Because even when I thought the bottom was coming in, I probably wasn't investing as much as I would have liked to have because of fear, because I was, worried that what if price continued to drop down, and what if it went to $10,000? Now we all have those thoughts, and it's not necessarily, nobody's immune to it, and it's good, to reflect and say, okay, what did I do wrong? And instead I was not greedy enough at the bottom. I should have bought more than I did, So going into the next cycle, we'll try and take that lesson and apply it, hopefully in some time, maybe 2026, 2027, whenever the next cycle comes around. Now, another thing that I learnt probably before 2023, but really same thing again, really applied it in 2023, is what I call inverse sentiment. So basically what you will see, I'll show you guys the Wall Street cheat sheet. You basically just need to somehow do the opposite of what the masses. At the bottom here, same thing again. This is where, we fall into the problem of not being greedy enough. This is where everyone is at their most bearish. This is when everyone is saying, no, price is going to collapse. Bitcoin's dead. Don't invest in this. When in reality, that is when you should be buying. Same thing at the top. When you're at here, everyone's saying Bitcoin to 100,000, go all in right now. It's the next best thing. When in reality, you should be selling. Euphoria is when you should be selling, and depression is when you should be buying. Inverse sentiment is something that I've tried to explain to people outside of the markets that don't invest, and you often get met with really weird looks like, what are you talking about? Trying to explain to them that, when the news is saying Bitcoin to $100,000 and everybody should be buying Bitcoin, that's actually when you sell. And they kind of go, why would you be doing the opposite of what the news is doing? Why would you be doing the opposite of what everyone else is doing? Well, to be honest, it's something that I struggle to explain why we do the opposite of what everybody else is doing. But it's just how the markets work. 90% of traders lose in the market for a reason. You've probably heard that statistic before, but it's because they get fooled at the tops, thinking that this is the next best thing, and they get fooled at the bottoms, thinking that this asset or the markets are dead, or that they're flawed, or that, something fundamentally has changed, and, it's time to get out, when in reality, you really should be doing the opposite, the exact opposite of what the market sentiment is, of what the majority is doing. You can see it on Twitter. If you were around, just scrolling through crypto Twitter during this time period, there were very few people who were saying this could potentially be a bottom. And same thing at the top here. If you were in crypto Twitter during this time, you would have seen everyone calling for 100,000 Bitcoin, this, that, yada yada. And then obviously what plays out is everyone gets wrecked except for the few really good traders, the professionals. So inverse sentiment, you see it on all different time frames. I mean, the most recent example, obviously the Bitcoin ETF just happened. Why is it that as soon as the Bitcoin ETF gets approved, price starts to dump, right? The Bitcoin ETF should be a huge positive news event that should pump Bitcoin up to $100,000, when in reality, you're just seeing price start to fall, and it will probably continue to fall for a little bit longer. I could go into, further detail as to why exactly inverse sentiment kind of occurs, but it's not really the time for this video. It's just about what I've learned, and I'm now applying. I really have tried to apply it during 2023, the inverse sentiment sort of motto, and something that I'm going to take into 2024 and continue on with me. And then hopefully when the market gets super euphoric and everyone starts calling for $1 million Bitcoin, I'm just going to sell. I'm going to sell. I'm going to say I'm happy with whatever I've got. I'm going to try and time the market sort of thing. And then all should be good. But those 5 lessons, hopefully, they've obviously, these are lessons that have helped me in my trading that I hope to take forward with me into future cycles, and hopefully they can help you out. Obviously, we'll run through them one more time. Invest far more in Bitcoin early in a bull market. Avoid coins for rewards. Don't be suckered into something like that. Be more greedy at the lows. Time targets over price targets. If you can hit your time targets, it doesn't matter what the price is. Just follow the time targets. They always seem to play out far more consistently. And then obviously inverse sentiment, doing the opposite of what the masses think. Now, that is going to wrap up today's video. So if you did enjoy, if you did learn something, feel free to comment down below, like the video, and as we said, subscribe to help push us up to 500 subscribers. I'd also have some referral codes down below. Feel free to use those. Check them out. See what I've got on offer. You might want to use some of them. But for today, guys, thank you all for watching, and I'll see you in the next one.